Welcome to my YouTube channel Stock Explorer. I am Arup, and here we uncover hidden gem stock with tremendous growth potential. I am excited to share with you some lesser known companies that have the ability to outshine the future. Join me on this journey of exploration and discover as we unearth this hidden gem together. Though in depth analysis and insightful discussion, I will shed light on these remarkable companies that are poised for success. Remember, investing in stock carries risk. Just like any other investment, it is crucial to conduct your own due diligence, consult with financial advisor, and diversify your portfolio to mitigate risks. My studies revolve around six pillars: ROE, ROCE, fair price, low debt, public holding, minimum public holding, growth in both sales and profit year on year, and business with less risk. It is important to know that I focus on the long term investment and not trading. Today's stock is a banking stock whose ROE is 16%, ROC is 6.31%. It is fairly priced at 127 rupees. Price to book value is 1.442. As it is a banking, we will not be considering debt, but however there is no place share. Public holding is minimum 29.41. However, 9% of this public holding belongs to a renowned stock investor. You can find it out from BSE stock report. Both sales and profit has increased year on year, and both is 29.41%. This business has less risk. I have picked up Federal Bank, which has published their Q1 result yesterday. But before we dive into the detail of Federal Bank, let's take a quick look at the Q1 result of Wipro 2, which is again a gem stock in its own right. However, I am not considering this because Wipro is already a well-known gem. However, let me tell brief outline of this. They have done a moderate report this June. It's a quarter one result. They got a high management efficiency with a ROE of 17.3%. Price to book value is good. Majority stakeholder is promoter. And now today's gem stock is Federal Bank. You have seen that sales is year on year growth is 39%, EBIT is 49%, net profit is 39%, EPS growth is 38%, capital adequacy ratio has gone down by 2%, interest earned is 38.46%, operating profit is 33.8%. However, net NPA also there is a trend in reduction, but however June 22 was better reduction. Gross NPA is also same. Okay, this is good. Let go to one disclaimer. This is before proceeding further. I would try to remind you that I am not a SEBI registered authorized stock analyst. I gather the stock performance data and trending from recent company report and collect various business report of magazines. Please note this is solely my personal study. I do not recommend you to invest based on it. Please discuss with your financial advisor before making any investment decision. Now coming back to Federal Bank. Federal Bank, like other bank, it got branches all over India, 24 states, all union territory. They have a network of 12,891 branches. Market cap is 26,858 crores. Price to book value is 1.42. Current price is 127 rupees. Face value 2 rupees. 52 week high and low is 143 and 96.1 respectively. Pytrosky score is 5. Stock P is 8.23 compared to 15 of industry P. PEG is 0.29, book value is 89.4, ROCE is 6.31%, dividend yield is 1.42%, ROE is 16%. Uh, fe- uh, okay, so Federal Bank has a long lending long record for a good result. It has strong lending practice evident through our low NPA record of 2.36. This ratio indicates that quality of loan portfolio and showcase the bank's commitment to maintain a healthy credit environment. Furthermore, banks' long-term fundamental strength is showcased by remarkable compounding annual growth rate at 28.5%. This is consistent growth demonstrate our ability to generate sustained earning and create value for stakeholder. Over the last 8 consecutive quarter, bank has declared positive result. This achievement reflects a consistent performance and highlight commitment to deliver value for investor and client. Bank interest earned for the quarter stands highest at 5024.53 crores, indicates ability to generate substantial income from lending activity. Additionally, NPA, which I already told, it is lowest 0.69%. Return on asset is also moderate 1.3. It is a fair valuation at 1.3 price to book value. Stock is trading at a fairly fair value compared to average historical valuation. In the past year, the bank has generated impressive return of 30.68%. Meanwhile, profit has risen 53.7%. Is demonstrate the ability to deliver solid financial result in future too. Anything else? PG, yes, PG is 0.27, which is PG is 0.29, indicating potential for further growth and making it an attractive investment opportunity. Okay, bank has highest institutional holding. Currently, it stands at 70.72%. This institutional investment possesses the capability and resources to thoroughly analyze company's fundamental, further validating the bank's financial performance and potential. It's worth noting that their stake has increased by 0.64% over previous quarter. Nearly 9% out of 29 public holding, which I told you earlier also, belongs to well-known investor. You can find it out from BSC's stock holding report. Among the 70% institutional holding, 26.94% is foreign investor and 43.66 is a domestic investor. This is quarter one result, which I cut a paste from their annual quarterly result. To understand this, bank results are little different from the other organization. because their main business is from interest. So let me discuss about these are the my analysis I cut paste here. So if you see the trend, okay, let me make the other one. Their Q1 revenue is 5025 lakhs, sorry, crores, and compared to June 22 it is a growth. Interest is also having a growth over here, but expenses also significantly grow to this. So overall net financial profit is 414 crores. Compared to June it is 354 crores, which is good. That is a which I shown in earlier also, but however from March figure it is gone down. Probably that is the reason market didn't like it. So share is trading 3 to 4% slipped sharp fall from yesterday. However, financial margin is also reduced. That percentage margin has also decreased. Profit before tax also have the same concern, although it grown from last June, but however they have reduced from the March figure. So everywhere you will find this impact. Okay, I think it is enough for this. You can do your own analysis from the stock market report. That is the trend of this. Okay, 1 year trend for Federal Bank. It is more or less consolidating. The stock is like this only. Yesterday there was a deep fall. Okay, however I find you also find that they have a much more potential, although this red line is about 50-day moving average, and 200-day moving average is a black line. So it is almost touching its 200 moving average line. I am sure it will not fall below 200 moving average line, although it all depends on the market sentiment. Let's go to the next slide. This is where we will discuss about compare Federal Bank with other banking industry. So if you see HDFC, ICICI, Kodak Mahindra, Axis Bank, IndusInd Bank, IDBI Bank, IDFC First Bank, and Federal Bank. Okay, those all are good. I have marked the best figure of every stock with a green cell, so you can note it down. I somehow feel Federal Bank, although nothing is green over here, but it is a potentially gem stock. Um, but it is not my recommendation to purchase it. Take your own decision to invest. Before investing, I would request you to consult your financial advisor. Tier 1 capital adequacy ratio (CAR) serves as a measure of bank's financial strength and stability. It indicates the proportion of a bank's Tier 1 capital in relation with the risk-weighted asset, which include loans, investment, and other assets. In case of Ujjivan Small Finance Bank, a Tier 1 capital adequacy ratio is 24.5, means that bank's Tier 1 capital constitutes 24.5% of risk-weighted asset. This ratio reflects the bank's ability to absorb potential losses and maintain a buffer against financial risks. You can term it as a provision which every bank does it. Tier 1 capital primarily consists of a bank's core capital, which includes shareholder equity and disclosed reserves, that is provisions. It represents the most reliable and highest quality capital that a bank holds, capable of absorbing losses without necessitating the banks to cease its operation. Obviously, a higher Tier 1 capital adequacy ratio indicates a stronger final position and greater capacity to handle financial shocks or unexpected losses. Regulators often establish minimum requirement of Tier 1 capital to ensure the bank maintains sufficient capital to safeguard the interest of the depositors and mitigate risks. It is important to note that regulatory requirement and acceptable level of Tier 1 CAR can vary across jurisdiction and may be subject to change based on prevailing economic condition and regulatory framework. By including Tier 1 capital adequacy ratio is in our analysis, we can gain insight to even small finance banks' financial stability and its ability to weather potential challenges in the banking industry. If you have any further question or need additional assistance, feel free to let me know. However, I would request if anybody from the audience who got a financial background or chartered accountant, please do comment in the comment box. I will be glad to receive such kind of input to enhance my learning. Let us have a calculation of CAR. So, CAR basically determines the it is basically a ratio of risk-weighted asset asset divided capital blocked for Tier 1 capital, which is blocked for reserve, divided by the risk-weighted asset. In this example, I have shown that suppose a bank got 800 crores capital reserve for Tier 1 capital and risk-weighted asset is 3200 crores. The calculation would be as follows: 800 crores divided by 3200 crores into 100, that is 25%. In this example, CAR would be 25%, indicating that bank's Tier 1 capital constitutes 25% of its risk-weighted asset. Please note, this is just an example and actual value can vary different bank based on the financials and regulatory requirement. Let me conclude this presentation. Thank you. Thank you all for listening.